we now can exit OPEC and not fundamentally be punished by Saudi Arabia in the short term because Saudi Arabia is trapped in their ability to provide additional supply and basically punish UAE by dropping oil prices with oversupply because Saudi can't get their production out of the Straits of Hormuz. Lots of very big things are happening in global crude oil markets today. 24 hours ago, United Arab Emirates, UAE, decided they were going to withdraw from being part of OPEC for the first time in over 60 years. So there's a lot of fundamental assessments about why the UAE has left. Look, I don't have all the answers, but I do have assumptions and I do have reconnaissance that helps me try to determine what's causing this particular exit at this point in time. First and foremost, both Saudi Arabia and UAE have public companies that are front-facing with private equity and private investment dollars. If you're inside of an organization that has a control component that tells you what you can produce and when you can produce it and to what level you can produce, you have an artificial throttle that controls the speed and the growth of your own business. If you take that controlled business and take it to the public market is going to respond to the future value of that public equity based on that control. So the UAE, as part of OPEC, is always being told by OPEC members and the main member, which is Saudi Arabia, this is your quota, this is how much you can produce, and essentially UAE and everybody that's involved in OPEC has to do according to what the OPEC agreement says in accordance with allowables, quotas, production limits, etc. Well, if the largest member, Saudi Arabia, decides it's better for them and their production to have a cutback in the allowances or quotas per OPEC member, maybe that's a disadvantage to the UAE. Maybe that's not what's best for their interests today. But particularly, it may not be the best interest to their public-facing company, ADNOC. Now, Saudi Arabia is in the same boat. They have Aramco, and they have issued all kinds of securities in the tunes of, $500 billion to $1 trillion, and those same application of fundamental economics applies to Saudi Arabia. In fact, if you really look at it, Saudi Arabia, back in 2019, when they were in a pissing match with Russia, decided, hey, let's flood the market, let's teach Russia a lesson. And that was further compounded or exasperated by the COVID-19 shutdown of the economy. Well, it turned from being a lesson that Saudi was trying to teach Russia into a lesson that the entire globe witnessed, which is when you produce too much oil too quickly, too fast, and lower demand, you have negative $37 oil on one trading day. Well, the backside of that's the same. So right now, it looks like to me what UAE has done, United Arab Emirates has done, is said, look, we now can exit OPEC and not fundamentally be punished by Saudi Arabia in the short term because Saudi Arabia is trapped in their ability to provide additional supply and basically punish UAE by dropping oil prices with oversupply because Saudi can't get their production out of the Straits of Hormuz. So this entire Iranian war, this Strait of Hormuz supply restriction is really offering others in the global macro market of crude oil production to make adjustments and decisions accordingly. Now, it doesn't matter if the Straits of Hormuz last another 30 days, 6 months, or it's over tomorrow. What really matters is that the recoil or the downside events of shutting down the Straits of Hormuz has caused fundamentally 3 or 4 things to happen. Number one, it's created an opportunity for those like the UAE to make an exit and try to establish their own global market based on their own production levels and at their own free market kind of considerations. That's a big deal. The second thing that's a big deal is that because of the backlog of production being shut down, because storage tanks are full, containers and containers at the ports are full, pipelines are full, the wellheads are now being choked back as far as production choke size. So we have gone from the source of the production all the way to the delivery point saying we have a bottleneck of stalemate. Everything's at a stalemate. That production limitation is about to come to a 100% header here in about the next 14 to 21 days. So when I think about the UAE breaking out, now it's going to come down to delivery, it's going to come down to logistics, it's going to come down to deliverability, and it's going to come down to whoever can deliver that crude oil from any place in the world that might be able to substitute any kind of deficiency or delays in supplies coming out of the Middle East. And last but not least, let's be realistic. We took about 670 million barrels of oil in strategic petroleum reserves and emergency reserves and storage, and we dumped it on the market around the globe over the last 50 to 60 days. As a result, we have a huge drawdown, about 1 to 1.5 billion barrels of oil globally. Well, when the production does come back online, it's going to come back on what I call a point to sale, meaning demand's 101 million barrels a day, we need 100 million barrels a day in supply. So unless we plan on excessively producing another 12 to 13 million barrels a day, once everything is back online, we're going to have about 1 to 1.5 billion barrels short in storage and emergency supplies that are going to have to be refilled over the next 12, 24, 36 months. Heavy demand increase for all the reasons I just described. And that means the UAE wants to participate in that excess demand for oil just to replace the supply. So any supply replacement will exceed the demand on a day-to-day basis, and everyone, including the UAE, wants that part of that bandwagon. They want that part of that financial reward. Thank you for listening. This is my opinion on why the UAE pulled out of the OPEC Accord and the OPEC organization.